Well, if you want to truly understand the heartbeat of Bharat, you need to look beyond the big cities and focus on the emerging brands and businesses that are thriving in India's Tier 2 and Tier 3 areas. Bharat is home to over 1,46,000 startups and 633 lakh MSMEs, contributing significantly to employment and GDP growth. All these businesses embody the aspirations of a rapidly evolving consumer base. Today, Bharat's consumers are aspirational, value quality and premium products, evident in their choices in two-wheelers, refrigerators and smartphones. Over 55 million rural households already own these essential consumer goods. The success of homegrown startups and enterprises driving this consumer revolution is crucial not just for regional growth, but for the nation's overall socio-economic development. So on this episode of Seed to Scale and CNBC TV18 presents Decoding Bharat, we dive deep into the factors behind the success of Bharat startups and explore how these business models are shaping the future of the nation. We're joined by a distinguished panel today: Amitabh Kant, G20 Sherpa and the former CEO of the NITI Aayog, Sudhir Sitapati, the CEO of Godrej Consumer Products, and Anand Daniel, partner at Accel. Gentlemen, thanks very much for joining us here on the program. Mr. Kant, let me start by asking you, while a lot is being made about startups that are serving Bharat, let's address the policy ecosystem and what has changed in your assessment to ensure that we not just widen the pipeline but also deepen it.
So Shereen, out of the 1,40,000 startups that you talked about, close to 50% of them come from Tier 2 and Tier 3 cities. And therefore the startup wave has spread across India. Lucknow, for example, has approximately about 450 odd technology startups, and they cover a range of areas from edtech to health tech, etc. I think one of the key reasons for this has been the widespread digital penetration, which has been a very key enabler. Rapid internet penetration, smartphones, adoption of UPI, they are all driving digital penetration in suburban and rural India. I mean, if you look at, say, for instance, the spread of Go Digit and ACO as far as insurance is concerned in Tier 2, Tier 3 cities, or if you look at Zerodha, Grow, Upstock, many of these in Tier 2, Tier 3 cities as well. Almost half our urban population lives in Tier 2 and Tier 3 cities. And cities like Indore, Jaipur, they are all now emerging as upcoming startups. And many tech companies have actually now established their operations in emerging centers such as Chandigarh, Vishakhapatnam, and all these. And according to me, one of the main reasons is that emerging cities offer talent at about close to 25 to 30% lower costs. There's a lower cost of living.
Yeah.
Increasingly, these emerging hubs are coming up with a complementary infrastructure. The government has put in huge resources into creating incubators, accelerators. Office rentals are often cheaper. And, the spend by the government in terms of housing, in terms of better roads, huge amount of better quality of improvement of infrastructure in the last 5 years has, to my mind, made a huge difference. And this will spread as infrastructure development, as skill development, the policy framework to support policies in Tier 2, Tier 3 cities will take place. We've just had this announcement of 12 new growth and industrial hubs being created, new industrial cities being created, and these are all in Tier 2, Tier 3 cities. So there'll be a huge economic value coming in from the real Bharat, the heart of India. Really.
Well, you talked about those 12 industrial parks, and that has got the cabinet's approval as well, with a significant budgetary allocation. But Sudhir, you've been a veteran of the FMCG industry. What's driving consumption today?
I think we're seeing two divergent trends in consumption, at least till the last 3-4 months, Shereen, where things may have changed a bit, but I'll pass that for the time being. I think we're seeing consumption in the top 20% of India really booming. And this top 20% now, accounts for 50% of the GDP, accounts for a very large part of consumption, and it's meaningful. It's definitely extends beyond Delhi and Bombay and goes to towns like Nasik. But we're also seeing a parallel trend of the next 80%, not doing so well. Majority of this 80%, lives in rural or kind of in the fringes of the big cities. So we are seeing a pretty major divergence in consumption trend. A lot of the focus, of course, is on the top 20% because they're a very large part of our economic, muscle. But there is a second story that's going on as well, or at least was going on till a few months ago. We're seeing some kind of change there and some kind of green shoots. But that has been a predominant kind of K-shaped story for the last 4 or 5 years.
Yes, you're right in pointing out the divergence, but what do you attribute that divergence to? And as you said, that we're now starting to see a little bit of convergence, perhaps on the back of the fact that we've had a decent monsoon, etc. But what would you attribute this divergence that you speak of? Because this hasn't been a 1 quarter or 2 quarter phenomena. It's been fairly elongated.
I think there are, my guess is, Shereen, that there are 2 causes. Part of it is cyclical. I think post-COVID and even maybe a year or 2 before that, we've been seeing a down cycle in rural. And perhaps we're at the end of that cycle. So there is a cyclical component to it. There's also perhaps a structural component to it, which is a lot of the wealth creation in India is happening with, GCCs and the top 5%, affecting another 15% in terms of asset price inflation. So a combination of technology, jobs, and asset price inflation is sort of booming the top 20. And that doesn't really affect or benefit the balance 80. But I would say there's a very large cyclical component as well. So I'm quite bullish and optimistic that things will turn as we speak.
Well, that certainly is the hope. But Anand, let's talk about this 80-20 divergence that we just heard there from Sudhir, as well as how you see the startup ecosystem changing consumption in this country. Because, let's be clear, when we talk about Bharat, we're basically talking about a population with a per capita, which is significantly lower than the per capita of an individual in Bombay, Delhi, etc. And that's essentially been the large underserved market, which we're now hoping will start to be perhaps served better. How are you reading this? How do you believe this is going to change consumption going forward?
See 450 million people in what we call Bharat using smartphones on a daily basis, and they're spending more than 100 minutes, and they're learning more about the product services that is offered all through. Right, so maybe initially we target the top 20-30% in tier 2, 3 and even the rural side. And if startups can build towards that, today payment is there, like UPI penetration north of 420 million people doing 14 billion transactions monthly. The infrastructure needed to reach these people is there. And you see early signs, take a Flipkart, Meesho, you talked about Zepto, or be it in financial side, Moneyview, other companies. Right? In various sectors, we are able to reach them. There's early signs. But the real question is, as India doubles its GDP from 3.5 trillion, when it doubles, a large portion of that is going to come from these tier 2, 3 and rural areas. So can you use technology, use the railroads that are already there, the infrastructure, and build solutions customized for them, for the aspirational Indian there? I think that's what's really exciting for the next decade for us as investors.
Mr. Kant, let's talk about some of those issues. And I think one of the challenges that we face is perhaps regulation. Whether it is fintech or retail or so on and so forth, I think that continues to be one of the causes for uncertainty and perhaps some degree of nervousness as well. As we look ahead, what do you believe the regulatory environment needs to factor in? For instance, the fintech argument is that, look, you need to treat us differently from the legacy players, from the big banks, etc. Perhaps there needs to be a different rule book. Do you believe we need to review regulation in light of the fact that technology, A, is changing so fast, but B, also, these are different business models addressing different needs?
So Shereen, 2 points on this. One is that whatever policy we have, there has to be stakeholder consultation. And then when the policies are made, they have to have predictability and consistency of policy over a long period of time. Because investors come in to invest if there is predictability and consistency of policy. And that, to my mind, is very, very clear. We can't afford to have constant policy changes on that. Number 2, I think huge focus needs to be now laid on, again, at the state level. The center has done its bit, but states need to now get into this business of scrapping rules, regulation, procedures, acts, which have been built up over the years and make themselves very easy and simple. Because the challenge, is that your average per capita income may be 2,500, but your per capita income is Bihar is about less than 500. In UP, it is 700. So you need to transform states like Bihar, UP. UP has done a lot in terms of infrastructure recently. And the third point I want to make is that it's, it's very, very critical that we are able to improve our learning outcomes, our health outcomes, our nutritional outcomes, and that will not be possible to the size and scale that we want. Without improving this, it'll be impossible for India to grow on a sustained basis on a 3-decade period, year after year at 9 to 10% plus. The heart of the challenge is in improving human development index, improving the physical quality of life index in almost 7 to 8 states of India. And that would mean a huge focus through technology. Without technology, it will not be possible to do it. And technology means a very critical role of startups, very critical role of, private sector in healthcare, education, clean energy, financial inclusion, livelihood creation. Because if we are able to transform, to my mind, it's a story of about 55% of India living in some of these, in the eastern part of India where you need to transform lives. And once you are able to do that, your demand for the next 3 decades will grow in a very big way, and you will create huge economic value for long-term sustained growth.
Well, we are going to head into a quick break, but return with more conversations on Decoding Bharat right after this. Welcome back. You're watching Seed to Scale, and CNBC TV18 present Decoding Bharat, where we dive deep into the driving forces behind the success of Bharat startups, uncovering how these innovative business models are shaping the future of our nation. Sudhir, I want to come back to you and understand from you, in the FMCG space, for instance, we've gone past the sachetization model, of trying to serve customers that ought to be served at a different price point. Now, as you look at the way India spends today, as you look at the way that India consumes today, where do you believe the opportunity lies? And as an large FMCG company like yours, how do you address that?
I mean, look, the opportunity in consumer goods is reasonably predictable. The biggest driver of consumer good category consumption is income growth. And if you're able to predict income growth, at what rate incomes grow, and median income more than mean income, because in FMCG and consumer goods, it's medium income that matters, you'll see an explosion of a whole set of new categories. Recently, Godrej announced entry into pet care. It's one of those categories that we think will really explode. So these are reasonably easy to plot out. What is not so easy to plot out is what will the median income growth be in India? How will the distribution of this income be? Where will it be between rural, urban, and states? But I think once you plot that out, the set of categories that will grow is actually quite easy to figure out.
Anand, as an investor, what are you betting on? I mean, which are the kind of companies, which are the kind of sectors that you're betting on where you see potential headroom for growth?
Yeah, that's a good question. So if you look at where consumers are spending money, right? So there's food and non-food broadly. And the recent household expenditure survey showed that even in rural, it's moving more towards non-food. Right, so which is the shift that happened very recently, right? So you're seeing people spending more. So food is a natural category, all the different categories within food. How do you bring across this board in products? Can you bring good selection, good quality, at a convenience that is offered in tier 1 cities, and at a price point that meets the value consciousness of this audience? So if you take across these categories, whether it's food or non-food, be it beauty, personal care, fashion, right? You can go down each and every one. These are on the product side. And then we also touched upon the services that are essential. We need to upskill. We need to educate and upskill. Can you use technology and reach these audience, right? So in a more efficient way, and educate them better, upskill them better for better jobs. So just follow where consumers are spending money. And each of these are large categories. And maybe you start with the top 20, 30% in these, build the infrastructure and the way to reach them, then you can go down.
Sudhir, I want to understand from you, so much has actually changed on the back end. I mean, the big moat for FMCG players like yours was the distribution muscle, the distribution pipeline. And we've seen on account of the kind of changes that startups have been able to bring in on the logistics side, now e-commerce, now quick commerce, etc. It has changed the rules of the game, so to speak. How do you look at that as an opportunity? How do you look at that from a point of view of collaboration, partnership, perhaps future M&A as well?
I would say distribution in most parts of India is a solved problem. And this is not the case. For example, we have a large business in sub-Saharan Africa where there is demand for products, but physical distribution doesn't exist. Except for pockets of India, let's say the Northeast, rural Bihar, etc., distribution is a solved problem. And this kind of predates e-commerce and Q-commerce, because e-commerce and Q-commerce have really made distribution available in areas where it was already available. But I think over the last 30, 40 years, distribution is perhaps not the kind of moat that it used to be. Then the question is, what is the moat? And the moats are two. One is product innovation, and the second is the brand. So these are the two areas in which, so if you're asking us on questions on acquisition, these are the important questions we ask. Is the product that is being acquired genuinely differentiated? Does it have a secret sauce to it? Is the brand aspirational? Because these are the two moats that now exist. Not that distribution is not a moat at all.
Let's talk about some of the opportunities that you're looking at, and just picking up from where we left off, the global aspiration of India's startups at this point in time. I mean, of course, on the payment side, you've got companies like PhonePe, etc., taking to markets like Sri Lanka, Singapore, and so on and so forth. Where else do you see this internationalization story playing itself out?
I think the Indian entrepreneur is getting more ambitious. On the software side, we've already built companies that have gone global and listed globally also. There's a lot of software being done from India for the globe. I think on the consumer side, it's still early days. The challenge is solving for India and doing it at a price point and scale that makes sense. And profitably. Yeah. See, once that happens, I think it's a natural extension that's going to happen. It's over the next 5-7 years, I would see that happening. But right now, people are putting heads down and ensuring that they can really make this work in the Indian context. And the next phase would be what you're talking about.
Yeah, well, that is going to be crucial. But Sudhir, let me wrap things up, and let me start with you. So when we talk about Bharat, in the context of where we are today, what does Bharat mean to you? In terms of the consumption class, in terms of the consuming behavior, in terms of the spending power, the spending capacity. I mean, how are you trying to cater to what is now sort of loosely called Bharat?
I think one area, Shereen, which is of absolute importance, which is probably not discussed as much in today's kind of tech fora, is the importance of agriculture. Because tech-related services generate value but not employment. Manufacturing, is not what it used to be. It's no longer like the 80s where manufacturing generates massive amounts of employment. So improving agri-productivity in India is the sustainable way for many parts of Bharat to come out of poverty and to kind of join the consuming class. And that's probably an area that's not adequately discussed, or at least I don't hear or read enough of it, or compared to what we used to some time ago.
No, you're making a very, very valid point, and let me get Mr. Kant to sum that up for us. That's a very, it's a sobering thought, but a very valid concern that Sudhir has put on the table, Mr. Kant. Where will the future jobs come from, and how concerned would you be about that?
So, Shereen, a very important point was made about agriculture. It's important to realize that India is amongst the rare countries where 46% of your population is dependent on agriculture. So you need to move population away from agriculture into manufacturing and into urbanization. That's critical. But having said that, on the agriculture side, it's very important for India to use data analytics to offer very personalized recommendations on crop management, pest control, soil health. We need to address the unique challenges faced by farmers in different areas. And similarly, I think we need young startups to be able to provide on the health side. We need better health facilities in rural areas. There's a huge market available there, in terms of hospitals which can provide 30 to 35 bedded hospitals with ICUs. I mean, many of these aspirational districts do not have good hospital facilities. And thirdly, I think the use of AI and machine learning to be able to transform education and health. Those are massive opportunities. So the challenge is that if we are able to bring in population scale transformation at low cost and yet be commercially viable, the market is not just the 1.4 billion people of India. The market will be the next 4 to 5 billion people of the world who will be moving from poverty to middle class in the next decade. And every Indian entrepreneur must look at that big market starting from India.
Well, gentlemen, thank you very much for joining us here on this very special edition of Decoding for Bharat. Thanks very much for sharing your insights as well as your perspectives on where we stand, but more importantly, what the road ahead looks like. As we've seen today, the story of Bharat is one with immense potential and resilience. As per a CII report, startups could contribute $1 trillion to India's economy by 2030 and create 50 million new jobs. The successful models we've discussed, from innovative e-commerce platforms to transformative rural manufacturing hubs, are lighting the way for India's economic future. These businesses are not just scaling new heights, but are also bringing the fruits of economic growth to the far corners of our country. Once again, many, many thanks for joining us on this final episode of Seed to Scale, and CNBC TV18 presents Decoding Bharat. We hope this series has provided valuable insights into the future of Bharat. We'll see you again, but for now, many thanks for watching.